All right, everyone, we are now officially underwater for the S&P 500 on a crazy and volatile week, but China is the big culprit here. The irony is that China's actions to control its currency, to forcibly bring it down, to forcibly help its businesses, to forcibly help them compete on the global markets is now coming to bite them in their heinies here. Those same businesses, those same multinational concerns in China are taking it on the chin on the Shanghai Composite. And worse, the very markets they hope to do business in are taking it on the chin. So this is a double no-win, and something market pro Craig Smith says we could have foreseen, because, Craig, your argument has been any time any government tries to step in and try to forcibly change market forces, it rarely ends well. But no one ever learns, do they?
Yeah, they really don't, Neil. And, you know, my favorite saying is the government can mess up a one-piece puzzle, and it doesn't matter which government it is. And I find it fascinating that the Chinese have dropped their rates on the yuan by 3.5% in 2 days, Neil. Now, that's not controlled. And, of course, they did it because they saw an 8.3% drop in exports and a 6% drop in factory output.
Then the markets would have reflected that, right? The markets would have then eventually said, hey, your economy is slowing down. We're going to take it out on your currency.
Absolutely. And you allow the market to do what it's supposed to do. It inhales and exhales. It breathes. It's a living being. And when you intervene and you manipulate, it causes problems. Neil, I'm just stunned by the naivety that I hear from some of the talking heads, even members of the Council on Foreign Relations, when they say, well, President Xi has to decide between the economic impact and the political impact of this, you know? I mean, does anybody remember Tiananmen Square? And then look at the areas around it. Malaysia ringgit down huge. That's right. Indonesian rupiah down to 1998 levels. Neil, long-term credit management. Does anybody hear that ringing in their head? And clearly this is a mistake on behalf of the Chinese. They think that they can overcome the global slowdown by making their products cheaper so people will buy more of them.
They lied. They lied just yesterday. They said, all right, we're done. One and done. This devaluation about 1.9%. That's it. We won't follow up. What do we discover this morning? They follow up with another devaluation. So it's one thing to lose the market's trust, but to keep losing it and then to add insult to injury and hurt the other markets as you're doing it, you don't make friends that way, do you?
No, you sure don't, especially not in the region, Neil. If you look in the Asian Pacific region, I mean, take a couple of our American companies. Apple gets 27% of its global revenues from China. Intel gets 36% of their revenues. Look at Yum Brands. They get 50% of their revenues from those areas. Now, they're going to either have to take it on the chops in the currency exchange and lower their revenues, or they're going to have to raise their prices to make the same amount of money. Neil, this will backfire on the Chinese, and I don't believe the drop in the yuan is over yet, Neil. I think there's still more to come. And those people who are naive enough to believe that, well, we're not in a currency war just yet, they are totally wrong. We are in a full-blown currency war, and it's going to get worse.
That's right, because other countries are going to say, oh, no, if you're going to rig yours, we're going to rig ours, and it's a battle that doesn't end nicely. Craig Smith, pressing as always, dead on. Thank you, my friend.